Right now, millions of traders are panic hitting the sell button. The Middle East is on fire. News headlines are screaming about the start of a global conflict, and the crypto market is experiencing the most massive price shock of 2026. Bitcoin is swinging by thousands of dollars in a matter of hours, and the fear and greed index has crashed to the absolute bottom level 10. Your portfolio is probably bleeding red right now, and you're thinking, maybe it's time to cash out and save what's left. Stop. Do not make a single move until you watch this video to the very last second. Because right now, while the terrified crowd is hysterically dumping their tokens, major players and whales are absolutely cold-bloodedly buying up this dip. And the main targets for their capital right now are XRP and HBAR. There is no fluff in this video, just hard facts, hidden metrics, and brutal technical analysis. We'll break down what actually happened over the last 24 hours in Iran, how insiders on crypto Twitter are reacting, and most importantly, I will show you the exact levels on the XRP and hedera charts where the fate of your portfolio is being decided right now. The chronology of chaos. What are the headlines hiding? To understand where the charts are going tomorrow, you need to clearly grasp the fundamental picture today. The calendar says March 2, 2026, and the last 48 hours have delivered a classic black swan event. The US and Israel launched unprecedented, coordinated strikes on Iranian infrastructure, hitting key military bases in Tehran and Shiraz. Iranian state media officially confirmed the death of Supreme Leader Ali Khamenei, and the conflict instantly began to spread. Hezbollah is firing rockets at Haifa. The IDF is leveling districts in Beirut, and shipping in the Strait of Hormuz is practically paralyzed. How did Bitcoin react? On the very first news, it dropped like a rock to the 63.0 mark. Retail investors began to capitulate en masse. But then we saw what I constantly warn you about on this channel, a brutal V-shaped recovery. Big capital instantly bought up the panic, pushing Bitcoin's price back above 68.0. Why? Because under the threat of blocked traditional finance and inflation risks from an oil crisis, capital from unstable regions will always flow into crypto. What is happening on crypto Twitter? If you open X, formerly Twitter, right now, you'll see an absolute divide. Analysts have split into two irreconcilable camps. The bears are screaming about the end of the cycle. They are convinced that the death of the Iranian leader has taken the brakes off the conflict, and March will bring a long, agonizing correction as markets price in the risk of a global war. On the other side are the bulls, who are closely reading between the lines and noting Donald Trump's post, where he sternly warned Iran against retaliatory action. The smart money on Twitter is currently writing one thing. War is always a money printer. As soon as shipping is restored, crypto will fly to new all-time highs, fueled by fresh liquidity injections. 10RP breakdown, the survival zone, and the retail trap. Now let's move on to the most important part, the charts. Let's start with XRP, which finds itself trapped between geopolitical panic and fundamental bullish news from Ripple. Right now, the asset is going through a brutal stress test. Write this down or mark it on your chart. The most critical level is 1.27. This is our global line of defense. If we hold this support amidst all this Middle Eastern chaos, we get a massive reversal signal. To break the bearish structure, we need to push through and consolidate above 1.51. This isn't just a random number. It's the key 61.8% Fibonacci retracement level, which always acts as a buying trigger for algorithmic bots. But I need to warn you, on-chain analytics show us a massive resistance wall in the 1.76 to 1.8 zone. Almost 2 billion XRP tokens were bought at this level. This means that as soon as the price gets there, the weak hands who have been sitting in the red will start exiting at break-even en masse. Meanwhile, the fundamentals remain rock solid. The integration of the RLOST stablecoin and expectations surrounding the Clarity Act make XRP not just a speculative token, but a liquidity bridge for real banks, which, in times of geopolitical storms, desperately need an independent transfer system. HBAR, the institutional shield in the era of crisis. Moving on to hedera. If XRP is money, HBAR is corporate infrastructure. While retail is panicking, institutions continue to build the real-world asset RWA tokenization sector, which by March 2026 has already surpassed $24 billion. And hedera, with its governing council featuring Google, IBM, and Boeing, is the perfect safe harbor for big capital. Look at the HBAR chart. The price has compressed like a spring into a super tight consolidation range of 0.098 to 0.1. The Relative Strength Index, RSI, is frozen exactly at 50. The asset is neither overbought nor oversold. The market is literally holding its breath. The MACD histogram is dead flat at 0. This kind of indicator compression always ends in a massive breakout. If the geopolitical tension eases and Bitcoin stabilizes, the first bullish target for HBAR is breaking the upper Bollinger Band at 0.11. Consolidating there opens a straight path to 0.12, and the macro target remains at the 200-day moving average around 0.16. But we are traders, not dreamers. If the conflict in Iran spirals out of control, expect HBAR to dump into the 0.09 zone. This is a historical double bottom base where whales have consistently placed their buy orders. The hidden whale game, the Clarity Act, and the geopolitical hedge. You need to understand one critically important thing. While the whole world watches the Middle East in horror, a completely different game is playing out on Wall Street. Whales aren't buying this dip for nothing. They know something that ordinary retail investors, blinded by fear, cannot see. And the key to this puzzle is the Clarity Act and the tokenization of real-world assets. Think about it. What happens to traditional finance during global conflicts? Sanctions, frozen accounts, disconnection from SWIFT. Under these conditions, large capital desperately needs a neutral, instant, and decentralized liquidity system. This is exactly where Ripple steps in with its RLOST stablecoin. XRP acts as the perfect bridge for cross-border transfers, bypassing any geopolitical barriers. The same goes for hedera. While retail is panic selling HBAR, the massive corporations on the governing council continue to migrate real-world assets onto the blockchain. War is war, but trillions of dollars don't just disappear. They simply seek out a quiet, high-tech haven. The Clarity Act gives these giants the long-awaited legal protection in the US, and that is exactly why institutions are placing their limit buy orders right now, while you are too scared to even open your portfolio. How to act right now. Remember the golden rule. When the fear index is at the bottom, institutions buy and retail sells. Don't be exit liquidity for the whales. Don't trade the headlines, trade the levels. Place your limit orders in safe zones. 1.27 for XRP and 0.09 for HBAR. Hedge your altcoin positions with Bitcoin in case of violent market squeezes, and strictly enforce your risk management. Write in the comments right now, what are you doing in this situation? Are you selling your altcoins to stay out of trouble, or are you aggressively buying this historic dump? I will be very interested to read your thoughts. Drop a like if this emergency breakdown was helpful, subscribe to Altcoin Insider, and make sure to smash that notification bell so you don't miss the next market update. Control your emotions, protect your bags. See you next time.